Hey guys, this is Logan and Chris. We are starting a new monthly show to bring you updates on the economy, commercial real estate world. We're going to go through some past monthly and quarterly successes, challenges, what we're doing differently just to set ourselves apart, talking about our next quarter goals, any deals that we have in our pipelines, and the most exciting projects that we're working on. So welcome to the Chris and Logan show. Chris, thanks for joining me, man.
Heck yeah, this is great.
So I told Chris at the beginning, probably 10 minutes before, that he needed to find something to wear because I was going to be as patriotic as I could. So I've got my flag, talk to me about how you feel about Old Navy. I mean, you already did, but if you come down there, it says live free as well.
Yep.
And I've got my branding on point everywhere. Live free investment.
That's free marketing. That's unreal, man. That's well played. I didn't know you were in tight with Old Navy like that. Congratulations.
I tell you what, man, distribution is just wonderful right now. I was also wondering, I know that we both work with the same kind of consultant on the marketing side. They sent me some really awesome stickers. Did you guys get some stickers?
I did get those.
Oh, man, I got them plastered on my truck. I got them on my –
Oh, nice.
Yeah, I got them on my laptop, everything. So it's all about the brand.
I have to do a better job of posting those stickers. We got to know that came in. That was a nice little surprise.
So the reason and kind of the hypothesis I wanted to have this with this show is because there's so many folks that are just kind of talking out there, right? And, we are less than talking, doing more action and taking action, even during, the pandemic and everything that we've got going on. And I just kind of wanted to spend some time, sharing some different updates from, both of our companies, but also kind of our, outlook on what's going on in the world. So, from a current economy standpoint, man, talk to me about how you're feeling about, COVID, just in general.
Yeah.
With my wife being pregnant, I know that you guys just had your second child and we're due anytime now, but so we're being a little more cautious, I think, than we were beforehand. But just talk to me from an economy standpoint on what's it look like in Nebraska right now. I can talk to Kansas City. And then kind of what that affects on our real estate investing.
I mean, in Omaha here, they opened back up a few weeks ago, and unfortunately, they're starting to see a spike in the numbers again. It is
Sure.
kind of, I get that there's a freedom choice of getting to go where you want to go, but it's certainly causing a spike again. So I don't know how that will affect the real estate portion. I can tell you, we really haven't felt a slowdown here. I know that some of the lenders are working with the borrowers.
Yeah.
We haven't had to take advantage of any of that stuff. We've been just fine. And really this is more just kind of streamlined the process. And I've said this before, and I'm not trying to be insensitive, but we're still trucking along.
Yeah.
And if anything, it's allowed us to get more done. I mean, now I can hop on a Zoom call instead of driving to go meet somebody at coffee. And
Right.
I still have coffee, of course, but you can knock out 3 of those in the same time it took 1. So I'm able to actually, what they say, touch way more people than usual. So
Well, yeah, I would agree with you. And I also want to point out that on our first podcast, you actually, I thought for a minute you might have had COVID because you started sweating and you really did start. I mean, you pushed through. I acknowledge that and I admire that. But I remember right afterwards, I mean, I got to go, man.
I was pale. You know what stinks about COVID is if you've left the house and you get sick, you just don't know is that what it is? Is that what's going on? Right. And what's crazy is that just 2 weeks ago, I thought I had it again.
Yeah.
But this was the most unique sickness I've had. It wasn't the end of the world, but I was sick, and it was 48 hours straight. And it was directly after I got back from Kansas City.
Yeah.
And I had walked some apartments, and I had no idea. I found out it was food poisoning. I've never had food poisoning.
You got food poisoning from KC?
No, there's no doubt it was from a Thai place in town here, but
it always is from a Thai place, man.
That's too bad.
I'm telling you what.
That's too bad, man.
I literally have stopped eating Thai takeout just because I'm like, I just don't know what's in there.
Yeah.
I love Thai food, man, but
48 hours was just hell. But
yeah. So Omaha is kind of seeing a spike. So is Kansas City.
Yeah.
Now let's relate this back to the commercial real estate world, because I read an article earlier this week, and I posted about this, how the top 10 real estate investment trusts in the country have really been putting everything on pause, right? However, there's one company that has bought $285 million worth of real estate the last 90 days. Not only that, they went and bought a $200 million property management portfolio. So my question to you, Chris, is, and my question I posed on LinkedIn was, what is this what is this real estate investment trust seeing out there in the marketplace? Because the whole article was saying, opportunities for smaller investors, right? And so tell me about what you think that private equity or real estate investment trust is seeing, and then what opportunities you're seeing from the, smaller investor type of opportunities right now.
Yeah, I mean, like I said earlier, we haven't slowed down, and I think that it's just on how you approach it. Our underwriting has obviously changed, and I would imagine that's something that's happened throughout the country. But it's not just the underwriting; it's also the way we negotiate these deals.
Yes,
we're seeing a lot more seller carryback opportunities, and 5 months ago that wasn't something that a seller was interested in because they knew they could just list it and just sell it to anybody for perhaps more than it's worth. And now I feel as though it's a buyer's market.
Yeah.
And so I understand the feeling to pull back a little bit. I get that.
Sure.
But if you're underwriting it extremely conservatively in a way you've never underwritten it before, and if you're locking in the correct type of debt, and if you had operators in place, I just don't feel like, look, it's not like, I hate to say this, and of course, some of these larger trusts that you're talking about, they've been doing it for tens and tens of years. And so it's certainly they know what they're going, but they have many, many people to please. And they're taking a lot less risk.
Yeah.
And with that comes a lot less reward, in my opinion.
Sure.
And I'm not saying willy-nilly just go buying things. But if you can take advantage of being, in my opinion, a buyer's market, being able to negotiate different outcomes and whatnot, I think that is what the trust that you're talking about is seeing.
Yeah.
Nobody else is buying. And it was that Buffett quote that I just saw you post the other day.
That's right.
Just lean into it. And, we're seeing that be very fruitful for us. And I know you guys are too.
Yeah, we definitely are. One thing what's interesting to talk through is, we actually closed two properties or two projects as acquisitions during the last 90 days, and then also brokered a $7.5 million property here in Kansas City as well. So through those two transactions, the equity raises were close to $5 million. What are you seeing from investor sentiment? Because you're out raising a lot of capital. What are the conversations that you're having? Have they changed? Do you have to focus more? Because I know from my perspective on our last project, it was a little bit of a struggle just because everybody didn't know kind of where we were at in the economy, if people were going to pay rents, all of those things. But tell me about how it's been raising capital during COVID. And I mean, obviously we're still in the midst of it. So
first off, I love that 7.5 deal you just got. That's great. That's going to be fun.
It was awesome, man. We're going to build.
I like the way it looks. And
I think we're going to build 80 units on top of the property as well, which is super exciting. Yeah.
That's exciting. Actually, we've been lucky enough to where we weren't just starting out. And don't get me wrong, if you're just starting out right now, now's a good time to build a brand, to start building those followers, to teach yourself as much as possible, and perhaps not take too much of a risk.
Right.
We've been lucky enough. We've been doing it long enough to where we still we're recycling with our investors.
Yeah.
And I'm not trying to speak of them as if they're not important. I'm just saying that they know what we've been able to do.
Sure.
They're seeing that we're approaching these differently and still in an educated manner. And they're still excited to continue to invest with us. So that's been helpful. And then I've also seen a relatively decent wave of newer investors who are interested because they've seen how volatile the market is right now.
Yes.
And without any way to explain what's going on, how are we spiking in the market when the unemployment's the highest it's ever been? And
right.
It makes absolutely no sense. And just funneling out money to people. And I know people need it. I'm just saying that what is the value of the dollar anymore? How is the market going up? And I think that some people who are that do more than just setting it and forgetting it, like their work 401k or something, the people who at least have been able to follow their investments a tad bit and seen the volatility and a little worried about what's to come, the elections coming up and whatnot, I think that has interested them in an alternative asset class like real estate because it seems to be tangible. It seems to be something more safe, certainly less affected by the volatility of the market. And we haven't had a problem with raising the money, which, knock on wood, but That's what we're seeing. We have not seen a big pullback. We really haven't.
Yeah. Have there been any additional questions from investors on how you're mitigating downside risk potentiality?
Oh, for sure. And we explain it up front. And we've had those questions, right? Like, well, are you sure right now is the time to do it? Or how do we know they're going to pay their rent?
Yeah.
Or, first off, how do we know they're going to pay their rent? It's a question you should have been asking if you've ever invested in real estate.
Right.
But we're writing these things at 20, 15, sometimes 25% vacant.
Sure.
We're writing these things at not raising rent for at least 2 years. And the crazy thing about that is we're still raising rent, and people
Yeah.
are still paying those raised rent just to market, but we're still doing it. And even though we're getting away with doing it and being successful at it, we're underwriting as if though we're not going to do it.
Sure.
So we had never underwritten like that. That was that's the part of the most syndicators portfolio, is that you're trying to buy something you can raise rents right away.
Right.
We're buying things you don't have to raise rent. If we
Sure.
do, it's a cherry on top. So yes, we've had them ask those questions, but I just think making sure it's safe. Look, there's a seller financing I was talking about earlier. We're structuring these so these seller financings are actually flowing through to our investors.
Right.
So for example, if it's a $1.5 million raise and 500 of that's carried by the seller, then it's really only a $1 million raise.
Sure.
Okay, so this is a unique market because we're able to get away with that. And let's say someone comes in and puts in $100,000. Well, originally that $100,000 would have only been a 6.6% ownership of that 1.5 million.
Right.
But now that it's only $1 million raise, that $100,000 is 10% of the ownership. So day one, our investors have more equity than they would have had.
Yep.
On a very favorable terms from the seller. And that's something that we weren't always able to do. And I think COVID has helped that opportunity.
Yes. So that's one of the questions I wanted to ask. That's something different, right? I mean, you are taking what the market is providing and you're pivoting and getting creative on the financing side of things. And this isn't on single family home, guys. This is on 100+ unit multifamily acquisitions. So it can be done. And every time I send Chris a deal, hey, ask them if we can do some sort of seller financing. That's typically the first question. So that's one thing I heard that you're doing differently, just from a downside mitigation risk. One, you're buying properties with debt service coverage ratios that are high enough that at even point right now, even maybe a drop right in rents or in occupancy, you're still able to service that debt, which is super important. And then being upfront and honest with your investors from the get-go is super important as well. I would say from our perspective, we have seen a lot of the same, right? I mean, we've seen less competition in going in on acquisitions. Now, there's some sellers that are just still unreasonable, and that's fine. We still make offers, and we just let them know, hey, we're interested, but we're not going to pay you for something that we have to take into consideration on our end, right? So we're baking that into it. And at the end of the day, one of our rocks, if you read Gino Wickman's traction book, one of our rocks is to make one LOI a week. I mean, that's important. And to do that, we have to look at 25 to 50 deals. We underwrite 10 and we make offers on one. So it's somewhat of a volume game. But what I like to hear from what you're doing differently is the ability to kind of look at that capital stack and get a little more creative with it. One thing that go ahead, Chris.
Well, I like that approach. I'm curious, I'd love to have your input. Why not put an LOI in on every single deal?
Well, there's some, I think that we're so far off, like $4 million, like that they're trying to sell.
That's fair.
And I'm like, well, we just can't do that.
Right.
But if we're in an 85% or 80% strike zone, we usually make that.
Awesome.
Yeah.
Yeah.
One thing that I've seen some capital raisers kind of pivoting to, or some of their larger LPs have been interested in, is not necessarily taking an equity stake in the deal, but transferring their equity into preferred equity. Have you guys
seen that?
Okay.
Yeah.
So maybe you can break down what that means.
Yeah. So we'll have a class A1 and a class A2 share. Or you could just make it easier to understand and have a class A, B, and C. And the final class, or the C, would be us as the GPs. Whether it's A1 or A2 or A and B, class A, they have no equity. They just have preferred return, and it's at a higher rate than usual, right? So a lot of our deals are, if there's only two classes of investors, it's 7% preferred return. Then after that, it's 70-30.
Yep.
Whereas now we're having people who are saying, look, there's a lot of who knows what's going to happen in the market? I don't know if I really care about real estate. I do like to put money in and get money back. So here's your Class A1 share of 10% preferred.
Yep.
You'll get it every time. And there's a catch up too, right? So if this quarter you're at 9% and the next quarter you're at 11%, you'll get all of that before A2 even gets anything.
Yep.
And that makes them happy. And it makes in my opinion, the investors that are more in it for the long run, happy because they have that patience to wait that game out. And they get returns on the back end as well, but throughout as well, I mean. Yeah. But then when it refinances, those Class A1, they're gone.
They're gone.
They made their 10%. They're certainly happy with 10%. Most people should be. And by the way, 10%, I'm glad you brought this up because I don't think people think about this very often. The 10% you make on a real estate transaction, if you're doing it correctly and you have the right bookkeepers and or CPA, that's 10% unaffected by taxes.
That's right.
So if you're in the 30th percentile, that's like making 13%.
Yep.
So that's so much different. If you put your money right now into the market and you make 10%, you're going to pay capital gains on that.
Yep.
So it's actually not even 10%. So anyway, they get their money, they're happy. It's tax-free 10%. And then that leaves way more of the piece of the pie for us that are a little more patient on it and we're a little more interested in the equity. And I have seen certainly that as a way to do it. I think a lot of times for us, we get an idea. I know you guys do the same thing. We get an idea of kind of perhaps what we think our investors from the get-go would be interested in.
Right.
I mean, it's just, because Corey, your partner, sometimes he'll have different investors who are interested in something I've never seen before. And so, and he does a great job of going out and then trying to find a specific outcome for that one or two investors, like a 1031 investor. Right. And that's the kind of stuff we try to do too.
Yeah, no, I think that's really smart. So I'm hearing it. You need to be creative right now. There's opportunities to pivot from your typical capital stack and create those new shares. I think that's one thing that's very interesting to a lot of folks. So I'm curious. So your past quarter, I'm a big planner, right? I've got my goal.
You're a huge planner.
Yeah. So I'd love to hear some of your past quarter successes, Chris, and what you guys have been able to accomplish over the last 90 days.
Well, I mean, I'd say that one of the most important things to us is that we're starting to scale with. We just hired somebody.
Yep.
And that's huge for us. I'd name drop him right now, but he's still at his W-2 for the next month, so I'm not going to throw him under the bus like that. He's about to get out of it. So that's been huge for us because we have a lot going on. And so it's nice to add somebody to the team.
I want to talk about that because yesterday I had a 4-hour planning meeting with Corey and Parker, right? And when I think about this, why I'm not worried about competition is because I know what it takes to actually build a real estate business. And so many folks out there want to be real estate investors. And we always talk about the difference between a real estate investor and the business of real estate investing. And it's super important because, I mean, we sat down and we worked through the next 90 days, what we need to do, what we need to focus on, our budget. We have a budget and all of these, all of these different things that I know, 95% of the guys out there that are listening to podcasts are not doing. And so I'm so glad to hear that you guys are scaling up. You're hiring somebody. So you guys have a real business, which is super important. Thank you for sharing that, man.
Well, I mean, it's also along with the whole business as opposed to investing thing is that we had the patience.
Yeah.
People in my life, whether it's family or friends or people in Colin's life or whatever, I'm sure you've heard it as well, is that they're like, well, you bought this apartment a year ago. Why don't we have $1 million today? It's like, that's not necessarily how it works. But once it comes to fruition, once you have that patience, once you're looking at it as a business as opposed to just trying to get a quick flip, so we started hitting it heavy about 3 years ago. It's been 7 years, but 3 years ago is when we started scaling.
Right.
And those are just now starting to come in where it's truly just mailbox stuff. Mailbox money, that's it. We don't even think about it. And it just takes some time. So it's not as fun as flipping a house, but if I want to take the next 3 weeks off, I will.
Yeah. Building wealth, man.
That takes planning. That takes wanting to own a business and a machine as opposed to just a quick turn.
Yeah.
And I usually do the same thing. I was talking to Corey the other day about that where you guys are going to have your office at.
Yeah. Awesome.
That's going to be a sweet deal for you guys.
Yeah, streetcars coming right by.
That's awesome.
Get this, SBA loan terms.
That's what I talked to him about.
3% for 25 years fixed, fully amortizing. That is awesome.
I told Corey this, it made me want to go buy a building like that and just start a new office, because you cannot beat those lending terms.
Yeah. You should get some folks in Omaha, go buy a building, have them be 51% owners, structure it that way. I mean, such a cool opportunity that I think we're doing. We're taking that opportunity right now to take advantage of those lending terms and finding a deal that fits with those, right?
That's huge.
Yeah.
Does that worry you? Does anything in the future worry you at all with the retail space, or are you just kind of fine tuning your approach as to what type of tenants those would be?
Yeah. I mean, so we're owner occupying. So as FTW continues to grow, we're going to need more space. Clemens is going to be moving in there. They're going to need more space. The other tenant is Herzog Construction, who's doing the streetcar. So they're going to be there for another 4 to 5 years. And then as we transform kind of that building and make it cool with a coffee shop, a gym, all of these different things, Clemens brand's going to elevate, FTW's brands will elevate. Other people are going to want to be in that space. And with those debt terms, I mean, to break even on that deal, it's really, really easy. So,
I agree.
But in general, yes, neighborhood retail shopping centers was something we were very focused on before COVID, and we had about $15 million worth of real estate under contract that we paused on, and I'm glad that we did. But we're starting to see those deals pop back up at somewhere around an 8.5% cap rate. And one of our goals is to start making offers on some of those deals at 10% cap rates. So that's one way and one opportunity I think that we're kind of seeing right now, because if we can get a 10% cap rate and put 4% debt on it, 600 basis point spread is pretty good.
That's huge, man.
Yeah. Okay, so I'll talk to a few of the successes that we've had this past quarter. So we bought 2 apartment complexes, smaller apartment complexes. We put 426 units under contract. We put that 40,000 square foot building under contract. We've got another 36 units going under contract, hopefully Monday, which is super exciting. We formulated a strategy around creating a blind pool fund structure for a very specific neighborhood that we're focused on. So that happened. And then we've got another 123 units that we're really, really close on. Those were some really big successes for us. Not only closing transactions, raising capital, brokering deals, and then also, still putting the strategy in place, launching the podcast, hiring the consultant that we both are working with, all of these different things. And it feels like, tell me if you feel this right now, it feels like right now there's a fire burning and now it's time to pour gasoline on it.
Oh, no question. Yeah, we've never been this motivated. And you just got to lean in, like we talked about earlier, and it's positively affecting us. Yesterday, we locked down 38 units.
All right.
Came out of pocket it was like a $1.6 million deal. We came out of pocket $100,000, $120,000.
Awesome.
Through seller financing and whatnot. We're refinancing a property next week. It's a 12 unit. We will get, at financing, not only will we get our capital back, we'll get $100,000 back in our pocket.
It's awesome, man.
So
huge success.
These things are, these are great. We're pretty excited about it. There's a lot of stuff going on moving forward.
Yeah, you're hiring people. You've got the brand up. You're going to start launching. You've launched your marketing efforts, which we had a lot of talks about and have been incredible. So that's really good. So let's talk about this quarter upcoming. What are some of your goals this quarter that you guys are going after?
Within the next 30 to 45 days will be about 850 units.
Yep.
We want to be at 1,000 by year end.
You're going to blow that out of the water.
I think so too. I appreciate you saying that. But that's kind of our goal. And then just kind of streamline the process with a new hire and, just keeping the investors happy. And the reason I talk about it in terms of units, because there's a number of measures that you could look at. But the reason I talk about it in terms of units is because we're growing that quickly, and I feel as though sometimes the larger the purchases, the more the units, the more you're able to sustain something like that. In my opinion, the better business you're proving that you have.
Right.
So 1,000 units, it'll be 1,100 units if we close on the deal, the one deal about.
Yes.
It'll be 1,100. in 3 years.
Yeah.
So we're happy with that.
Yeah.
It's funny too, because I was speaking to people on through LinkedIn or social media, and everyone talks about Atlanta and the Southeast or Dallas,
Yep.
and nobody. I shouldn't say nobody, but I don't see much of a fire for the Midwest. And is it bad that I'm like kind of happy they're not talking
No,
about
it's good, and it's because
it?
it's because guys like you and I are dominating the space, and to come into a market like this takes infrastructure,
Yeah.
and you're building it, we're building it, and it's really really important. So I'm okay with Kansas City kind of being on
Yeah.
the on the radar, under the radar, and you've identified another market. Tell us about the second market that you guys are working in right now, other than Nebraska.
Yeah. So we're in Omaha. We'll have about 650 or so in there. We have 50 down in Kansas City, looking to add another large purchase down in Kansas City in the next couple
Yep.
months. And then we've moved into Sioux Falls as well, Sioux Falls,
Yes.
South Dakota. Oftentimes I'll say Sioux Falls and people think about Sioux City, Iowa, but there's a couple reasons we feel as though it's most important. First, back in the 08-09 crash, the second quickest growing county in the country was Minnehaha County, which is the county of Sioux Falls, South Dakota. Second to only Henderson County in Vegas.
Yeah.
But unlike Henderson County, Sioux Falls wasn't building large vacant neighborhoods
Sure.
to be filled up by REITs. It wasn't like that. It was actually just it's a great state to live in.
Organic
Sioux Falls
growth.
What's that?
Organic growth.
It's organic growth, safe state, safe place, no state taxes. People are interested in that.
Yeah.
It's right on the border of Minnesota as well as Iowa, so it's close to everything. A few colleges, plenty of places to work. And I went to college there.
Yeah.
So I also know a lot about it as well, as far
Sure.
as I know how quickly it's grown. And, it's a nice little hush hush. I'm not quite, I don't really necessarily care if people do that. I love we're going to continue to grow those as well. We're basically a 3-mile radius of Omaha. We're looking at a strong Des Moines deal as well right now.
Okay.
But I mean, I love Kansas City, as you know, and I love Omaha, but Sioux Falls has been working well for us. Are you guys ever getting outside of Kansas City, you think?
I think if we do, it's going to be out in Arizona, actually. So we've got some connections out in Phoenix and Tucson market. I think the markers, the economic markers look really good out there.
I've heard that.
The biggest piece is just finding the operator that you can trust, right? I mean, that's what you've been able to do in Kansas City, in Omaha. You're doing it in Sioux Falls.
Got it.
Right? I got it. Sioux Falls. You're doing it in Sioux Falls. So it's like, okay, well, to scale up in one of those markets, we need to make sure we have the boots on the ground that we feel comfortable with. And so we're just, we're taking that relationship nice and slow.
That's good that you're building that. What'd you tell me when we first met? What is it, partners?
What'd you say?
When we first met, you said with partners, you got to get that dating. You got to get that dating going first before you actually commit.
You absolutely do. And
one of the benefits we feel is though keeping that 3-hour radius of Omaha is that we can drive there.
Yes.
Not that you need to be able to drive places. There are plenty of people who are syndicators throughout the country who are investing 2,000 miles away and they're successful. But we like the ability to be able to get there, and that's why we haven't pulled the trigger on something that far away. I've heard great things about Tucson.
Yeah.
I've heard good things about Phoenix. So I think you guys will be successful there too.
Yeah, I wouldn't mind having a house out there, in the wintertime too, just to be a snowbird at some point,
Not too shabby.
Yeah, but I'm not much of a golf player, so I don't know what I would do out there in Arizona. I need to have a big lake, that I could go hang out on or something.
That would be awesome.
Yeah.
I mean, everyone there has a pool, so.
That's true. My wife loves pools, but I wonder if I'll ever get my wife to move away from her family at all. So, but I'm blessed to be in a market similar to you that you can invest in your backyard. I think it's important because we have a competitive edge being here in Kansas City, right? I mean, it's the same thing with you. And so it's really important to, and not everybody can do that, right? If you're out in LA, it might be really difficult to kind of get 650 units,
Oh, yeah.
You're out in New York, probably really difficult to do that. And that's why you need to call Chris and then call myself as well. So we can find you properties that you can either invest in the Midwest. So, okay, cool, man. Well, we've covered a lot of things: current economy, opportunities and challenges, the past quarter and successes, what we're doing differently in relation to the capital stack and the asset classes we're going on. We talked a little bit about the next quarter goals. I'll chime in there because I haven't talked yet. So we had a big goal from a revenue standpoint with FTW Investments for the last 3 quarters. I'm happy to say that we surpassed that goal, and we've doubled it from a revenue standpoint. So I'm really excited by that. We have some other really good goals, especially around the actual business part of it. We hired a accountant that we have on staff now. We've taken on some more property management on the low income housing stuff. So we're kind of focusing on that as well, and just beefing that kind of operational capacity up is really, really important. Looking at new goals or new deals, we're to the point, because we're about 2 years behind, I would say, where you and Colin are. So we're kind of just now getting people to like take us serious with 150 unit apartment complexes purchases and things like that. When we get this 426 done, that will obviously be a big help. But now that we're starting to see this brand presence kind of get some momentum, people are taking us seriously. That's really good, because believe it or not, a lot of the folks that broker large deals in Kansas City do not live in Kansas City. They're capital markets guys. So they might have a home base in Texas or in California or Florida or something. And so they don't know us, right? The local brokers do. So that's important too. But like just having that brand awareness is super important. So one thing.
But you guys, look, even with you talk about being unit-wise behind Connor. You, Corey, and Parker, you guys have so much experience, though. And one of the great things about your guys' team is that you all bring something really unique to the mix.
Yep.
So you guys are going to blow it out of the water. I'm excited for you guys.
Yeah, well, I appreciate that, and I think we will too. It's just doing it where you can do it enjoyably.
Yeah.
Okay.
These first times, right? Building the base, building the foundation.
Yeah. What's the most exciting project that you're working on right now? You don't have to give us specifics, but it could be personal, it could be professional, it can be anything. What's the most exciting thing? Like, what's getting you up, pumped up, and excited every single morning, other than that coffee right there?
Oh, that was full when we started, or close to.
Start sweating again here.
I'd say what that Sioux Falls deal is pretty exciting to me, only because that's where I went to school, and it's such a good opportunity. And people up there that I know who are investors who are now in on the deal already are so excited, because they're first off a little obviously pleasantly surprised, but surprised that I have it under contract, because they're like, how did you find this deal? And then also, it's just nice to see something like that make sense in their own backyard. I know investors up there who are investing with syndicators throughout the country, but not right there. And there's a good opportunity there. So that's really exciting to me. And I went to school there, which is huge. This large deal I'm working on in Kansas City is really exciting to me as well. It's a huge learning curve for us, because you're introducing things like solar and LIHTC. And I'm having to hire more and more professionals. We're paying out money before we even know this thing is going to go down. But that's really exciting to me, because even if this doesn't work moving forward, which of course I hope that it does, I'm just saying if it doesn't, I now have that knowledge base to help us move forward. And I think there's a large opportunity there. So that's huge for us. Another thing that's big for me is that I said it earlier, but it's actually, it's just perfect timing in our conversation, that about 3 years in now, Colin and I are starting to see these returns on our investments that I thought about, and sometimes I couldn't get to sleep with because there were these daydreams I had. They're actually coming true. And it's so great to see that happen. And it's so great to know that the patience, and also just for our investors too. I mean, in the middle of COVID, we're raising on over 350 units.
Right.
And people are just still excited to invest with us because we're doing well. And that's a good feeling as well.
Absolutely, man. That's incredible. The most exciting thing I've got going on over the next 90 days is I'm welcoming our second child into the world in the next 2 weeks.
Oh yeah, that's kind of a big deal.
Yeah, I think it will be. So we're gonna have a baby boy.
That's awesome.
That we're really excited about. So that's pretty cool. I'm really excited about. I took some time during kind of the beginning of COVID, not only to formalize the partnership with Parker and Corey, but to really build some what I'll call scalable measures around the brokerage business. So I'm really excited about that. I'm excited about Kansas City, what's happening here, the relationships that we're starting to build through podcasts. And I'm also excited about the ability to maybe exponentially increase the efficiency and effectiveness with connecting with people, right? The last 90 days has been wonderful because we can do things like this that's now widely accepted instead of having to maybe jump in the car and try to meet with 5 or 6 people during the day. I mean, that just was exhausting going from place to place. So the effectiveness and efficiency piece is really, really important. Most important question of this show. This is show number 1. We're going to do this monthly, giving you guys updates on everything that's going on. If and when we have projects that we're working on, we will showcase those at the end. So I'm not sure if Chris, is doing such a good job on the capital raising side that, potential doesn't need to, maybe talk about some of the projects, but that's going to be a segment here. But we're getting ready to have the 4th of July. Chris, just wanted to acknowledge you for serving our country, man, and being,
Thanks.
in the military. I'm every single day I feel gratitude and grateful for folks, because I actually connect with a lot of military investors, and we have quite a few military investors, a lot of Air Force guys, Marines. They have time to kind of read, and I think there's been a nice educational wave kind of go through the military on educating. And so, we're getting ready to celebrate the 4th of July. So this is still the greatest country in the world. We are still going through a lot of things, yes, but we wake up every day and decide that we get to do what we want to do. And a lot of people don't have that opportunity. And we have the economic capacity to build businesses. The time has never been better, in my opinion, to take your knowledge, experience, or go learn through social media, through YouTube, whatever, and build an actual business. I talked with Taylor's father, who retired when he was 40 years old. And he retired because they built this big rental business up to 8 or 10 locations. And he structured it in a way that made a lot of sense, still owns the real estate. He was a smart guy. But he's been so out of the loop on the business side of things. Like, you don't need a storefront anymore. You don't have to have a building. You don't have to sell products, physical, tangible products to people. You get paid in proportion to the value that you bring to folks. And we have the opportunity right now to do that. That's very exciting to me. I love this country. I've got my American flag stuff on. Chris, thank you for serving our country. And what do you have for some just closing thoughts on that, man?
First off, I appreciate you saying that. And to be honest, I kind of lucked out in my what I would consider lucked out. I wasn't put in danger's way necessarily.
Sure.
I was only in the military for a couple of years as my obligation. And I think it's important, and I'm glad you say that, because I feel like our generations and people around our age are kind of losing focus of, and not everybody, of course,
Sure.
you just thank me, but I think it's really important. I always go out of my way to thank these people, because they have done so much, and that sacrifice is huge. So I appreciate you saying that. And I truthfully am trying to sincerely downplay what I did, because I was stationed in Hawaii. I was there for 2 years.
You bought that shirt there.
I bought this shirt here. I still fit into it. I'm happy about that.
That's Vineyard Vines, baby.
Yes, sir. I mean, look, I appreciate you saying that, but there are certainly people to thank, and it's all of them, and it's a huge sacrifice. So I'm really glad you said that, because I think everybody should think about that during this time. And then, I like what you said, and you kind of hinted at it earlier when you're talking about FTW, and even we're doing the same thing. I think right now, whether you're investing or not, right now is the time to build that foundational base, education, and the marketing and networking. And this is a huge opportunity, because people now understand, let's just jump on these Zoom calls. Let's just go ahead and I can join a book club. I can do things that typically either were kind of viewed upon as non-traditional or simply just something that wasn't on our radar. And now we can have that opportunity to educate, because there will continue to be more and more opportunities. So this is huge. And I'm glad we're recording this, man. I'm excited to continue to keep each other posted. I'm really excited in a month to hear about your big 426 unit deal. It's gonna be
we'll definitely showcase that. So Chris, where can people follow you at? Where can they connect with you at? Let's direct folks there. I'll do the same.
Chris at parkavinvesting.com. The name of our company is Park Ave Capital, but the email address is parkavinvesting.com. You can catch us on Twitter, LinkedIn,
website,
Instagram. Website is parkavinvesting.com. We're really good about reaching back out to people, and we like to just talk about this stuff. I mean, I could, if my family life allowed it, and my life allowed it, I could talk about this all day. But so I'm always excited to talk about it. So
I
It
heard
does
I
the best
heard
we can
wife.
handle.
I heard wife, not life. I don't
Did I
know.
say wife?
I'm just kidding. Uh, thank you for that. We'll definitely showcase that. There'll be a new YouTube channel. Maybe we'll mock up a cool little, brand for this, the
Yeah.
Chris and Logan show. If you want to follow me, just get on LinkedIn, Logan Freeman, FTWinvestmentsLLC.com. What are you doing for the 4th of July, Chris?
Family, grilling, steaks. Costco sells these ribeye cap steaks,
Yeah.
and they're certainly not inexpensive, but oh my gosh, I think it's the best steak I've ever had. So
Wow. Okay. Well,
best steak I've ever had.
I got a bunch of Omaha, steaks from you, and I really appreciated that. But maybe I just need to go to Costco instead. So
Believe it or not, it's really good. It's
yeah,
really good.
no, we get
How
most
about
of our,
yourself?
we're just kind of relaxing. Taylor's really,
Uh,
important to stay quarantined.
right.
So unfortunately, we won't be doing anything, crazy. But hopefully, I'll be able to catch up on 4 email addresses. I'm looking at them: 139, 58, 10, and 72. I need to get back to some people. There's some things that
Yeah,
I need to do, and I don't know about you, man, but I just cannot stand email. Oh my gosh, I
it's
just have.
tough.
Oh
It's
man, so I got to figure out a way to get some of this email off of me, because as you continue to put out content, as I continue to put out content, there's gold in my email box that I need to work on. It's just from
yeah.
a capacity standpoint, it can be really, really difficult. So hope you guys enjoyed the first episode of the Chris and Logan show. Again, we're going to be doing this monthly. Maybe we'll figure out a way to ask some folks some questions, so that they can send us some questions beforehand that we can go through. But I think I'm a pretty good talker, and I can probably ask Chris, the mastermind, all of the questions that we need. So Chris, thanks for being here, man.
Hey, thanks, Logan. You the same, man.